Hello and welcome to this topic called Managing Foundation Tax Configuration. This is the critical setup area for your implementation of the Cloud Advanced Tax. So in this chapter, we've got a few topics to cover. So first of all, we're going to give you again a brief overview of the tax engine module. We're going to focus in this chapter very much on the foundation tax configuration. For a number of you, that could be the minimum and the only setup you do. So when your tax determining steps are used in the tax engine, it drives everything from this core or foundation setup, often referred to as a regime to rate configuration. We're also going to discuss actually how we are efficient in creating all of your tax configuration, possibly across multi-countries. And the recommended route now is you use the rapid spreadsheets. If you can't use the rapid spreadsheets, then you've still got the very much efficient UI to do your configuration in the various cloud UIs rather than from the spreadsheet. But in the spreadsheets, we've got an implementation workbook and a configuration workbook, and that's the route really to do majority of your configuration. Now, part of that foundation configuration, we're going to talk about the enterprise model. So we're going to make sure you're happy with legal entities and business units. And part of your setup of the regime needs to subscribe to either a business unit or legal entity. So we're going to make sure that you're happy with the definition of those two. We're going to look at, very, very important, not only for the core foundation, but when you're using advanced rules, how tax is calculated. So we've got 9 steps to go through where the tax determination engine goes methodically through these steps. If there's no rules, it's looking at all the direct setup. If there is rules, it will interpret the rules and apply a rule in preference to your direct or foundation setup. So we'll look at those so we understand, if you like, mechanics in the tax engine of step by step what's happening. And in the later chapters, you'll see that gives you the flexibility to go in and build more complex tax rules. We're then going to talk about the tax simulation. Tax simulation, best practice, if you're building anything, test it before you release it to apply to your transactions. And the last of the tax chapter, we're looking at partner integration through Vertex Cloud and some of the new features that have been introduced recently. So, big picture, let's start from the 1 point, and right at the top you'll see it's a single point solution. So how complex or how simple your tax requirements are, we've got one set of UIs, and these days loading everything from the spreadsheet, one place to, in terms of configure and tweak your, in terms of tax engine. Global needs, so not only for cross-border, in Europe, if you've got any intra-EU movements, that is all covered. Also intercompany transactions. And in terms of your local compliance and reporting is built together from our recording repository. Previous releases, you would set tax up, say in purchasing and payables, a different tax setup in order management and AR. And again, back to this message of a single point solution. The UI and the determining factors in the engine is across all of the products. So whether you're in order to cash, procure to pay, one-stop shop now to do your configuration. And the key points that we'll come for is you've got your tax configuration. So this is all your rules. It could be as simple as just the foundation setup. So your direct and indirect defaults, and that's going to drive all the determining factors. More complex, you'll have tax rules overriding that core setup. Everything is stored in a central repository, so you've got a single source of truth to drive your reporting. And my experience, again, if you've got simple reporting needs, then you've got a tax reporting ledger that will give you all of your output, input, and various exception reports. In Europe and other countries of the world, obviously, the more in terms of specific you need reports, that normally means you have to do some further setup. So you have tax reporting types, tax reporting codes, and you use those to filter and drive your localized reports. On the rare occasion, in terms of if you need partner integration on premise, there's a lot of choice. In the cloud, the, if you like, punch out or use of a third party is restricted to Vertex cloud, and that currently is restricted to US and Canada customers. Now, before we get too far in looking at the nitty-gritty of the tiers of the actual setting up of the tax engine, what I thought I would do is include here some of the definitions, because if you're new to looking at this tax engine, then it's a good idea to have a grasp of these definitions before you go further. So tax authority, this is defined as a government department that regulates tax law, administers and audit one or more taxes. So everything, ultimately our reports, the collecting, will go to a tax authority. And in the system, you have an opportunity to save the tax authorities in terms of as part of the legal entity in terms of configuration. The tax regime, and we often say regime to rate, that's defined here, look, as a set of tax rules that determines the treatment of one or more tax administered by a tax authority. The common tax regime setup is one tax regime per country per tax type. So you'll have one setup in Europe or in UK, let's take that. We'll have a VAT as the tax type in a regime. If I have withholding tax, that's a different tax type. So I'd have another withholding tax setup within a withholding tax regime. And the tax requirements are administered by a government tax authority. So you're likely to get the tax auditor or VAT inspector arriving to audit your books under that concept of a regime. Tax is probably what we all talk about in a common, particularly when you're looking at workshops, of what you're actually configuring. Is it sales tax based on a city, county or state? Is it VAT, which tends to be a location of countrywide? And this definition here, look, it's the classification of a charge imposed by a government through a fiscal or tax authority. Each separate tax in a tax regime includes records of the tax status, tax rates that are used to calculate and report the tax. So under a tax, you've got the tax status. So that's the taxable nature of a product or service in terms of, if I put in there, contents of a transaction and a specific tax on the transaction. For example, you can have a tax of separate tax statuses for standard, zero, exempt, penalty and reduced rates. And that's very typical in a VAT configuration. And you define all the applicable tax rates and effective periods for the tax status. The tax jurisdiction, that's your geographical area. In some of the VAT, relatively simple because it's the whole country. It's applicable either a ship to or ship from that country. It all becomes the one jurisdiction. Obviously on the location-based tax, then your TCA hierarchy of, could be the country, could be state, could be city, could be province. That will have a significant play in which particular status or rate is applied onto your transactions. The final thing is to get right is the tax rate. And let's definition first. The rate specified for a tax status and is effective for a period of time. So for a tax rate record with applicable tax rate details information per period rate, the rate period accounts for changes in tax over time. So for the example in the UK, for a long time it was 17.5%. The standard rate has now dropped for 15%, and then recently in the last couple of years has gone up to 20%. So the flexibility of the engine is normally driven around by the date effectiveness of using the tax rate. And finally, again, location tax, probably not relevant, but in a VAT system, the proportion of the tax that's recoverable, that's called the tax recoverability. And again, it's a critical control point on your setup of whether you're going to switch recoverability calculation on or off. And that will look at the portion of the tax charges recoverable. And normally you talk about 100% recoverable, 0% recoverable, and in certain scenarios you may well have a percentage recoverable that's dictated from your sales from the previous year. So part of your sales a standard rate, part of your sales a reduced rate. That might give you a percentage, and that percentage will be applied to your transactions in the new year. So all the definitions often abbreviated to sort of a flow in terms of the configuration of a regime to rate. So if we look at the overall architecture here of the tax engine, notice at the front it is a single data model, and you've got 5 tiers. So we've got 5 tiers coming down this right hand side. So if we start with our initial configuration, the tax configuration, that's what we've just gone through, all the definitions. So our regime all the way to the tax rate. So in terms of the set of rules, the treatment of one or more taxes in our regime, the classification of a particular charge under a regime payable to a tax authority is the tax. And under a tax, we'll have our statuses, rates, and particular jurisdictions will drive those different statuses and rates. And in our core setup, that's probably the minimum you would do, would be a regime to rate. Now on top of that, you have the flexibility in the tax determining, and conceptually these are built, again the mechanics are a little bit more tricky, but conceptually in terms of it's built into these 4 Ps. Party, be that the first person, i.e. your company, the legal entity, customers, suppliers, the third parties, and those ship tos, bill to sites in those, products, various products normally in the rules and regulations of the authorities, some are in the scope of a tax, some are outside the scope, some are 0 rated. Place, if you've got crossing over borders, particularly if you're moving between intra-EU member states, different tax rates apply. And the process, you know, is it an expense invoice? Is it an intercompany invoice? Do we use the process to drive what is the particular tax status and rate for that transaction? So traditionally, and you'll see this in the next chapter, we're going to use a whole collection of these determining factors, put them into a condition set, and that's going to drive our what we refer to as advanced rules. So depending on where we've shipped it, the type of product, the type of third party we're shipping it or buying it from, that will influence whether we change or overwrite the minimum or the core setup. If we like, it's called advanced configuration, but this really shows us more of the determining factors or the determining steps that the engine runs through to assess the calculation of tax. So it selects the tax regime and what's applicable, and part of that it's also looking at your jurisdictions. Is the place of supply within the relevant jurisdiction? So the place of supply, whether the transactions or the party involved is a transaction, that's particularly important when you're self-assessing. The taxable basis, recovery rates are all applied in this determining factor when the engine's looking on this particular transaction line, which appropriate tax status rates are applicable. So the services provided for the engine, it calculates taxes, so it puts in based on the transaction line passed. Ultimately it's going to calculate a taxable amount, and that taxable amount and the taxable basis will be passed into the repository. If it's a recoverable tax, it will determine the recoverability, typically 100%, could be 0, could be some proportion in between. Using Functional Setup Manager, we've got this ability to export and import the setup. Say I've done all the setup and tested it in my test database, I'm going to move that across to my prod database. We can do that through the export import services provided by Functional Setup Manager. And we also have a nice integration with our third-party providers. And with those third-party providers, we might just be loading tax content. So we're loading all the location in terms of addresses and all of the rates and statuses with those addresses. We might be getting the partner to not only load the content, but also to do the calculation. And our third option is also then to get them also to do our reporting for us. But at the moment in the cloud, that's restricted to Vertex Q, and you'll find we've got a couple of slides to finish this chapter talking about how you can use that. So it's particularly at the moment for the USA and Canada, but other countries are expected to roll out. So keep a look in the Customer Connect, and that will show you all the countries where that in terms of partner integration is now provided. Probably in terms of your tax authorities and your tax auditors, the most important bit will be down the bottom, this central repository for reporting. And as I say, depending where you are in the world, you tend to find there's a core set of reports that will meet perhaps your internal auditing, your management reporting, and then on top of that, there tends to be local reports that revolve around very specific reports for the UK, for Italy, for France, for Canada, etc. And single tax repository, and in some cases, the actual need for those localization reports will infect back to your regime to rate. How many rates and statuses you define might be a reflection of the type of reports you want to produce from the tax repository. So if we look here, and this is really following on from the last slide where we've got the regime to rate, and we've got our determining factors, split, party, place, product and process. But let's take a more sort of global or more strategic view here of how we're going to implement this tax engine. So before we do anything, and before we decide whether we've got a simple setup with just the core foundation, or whether we've got a more complex setup where we're using advanced rules, these are the 4 questions you might want to ask yourself. So who am I? And who are my customers or suppliers? Where do I operate? So my place, is it restricted just to within my country boundaries, or do I export? Do I have any inter-zone movements? The products I sell, are they standard rated? Are they 0 rated? Do I sell a mixture of both standard, reduced, 0 rated? And what type of business do I conduct? Am I a manufacturer? Am I supplying subcomponents? Am I a manufacturer supplying finished goods? Am I a customer that just deals with, in terms of moving goods directly to the consumer? So all of those will have an impact on, in terms of the type of tax or tax engine that I am about to build. And remember, if you go to Oracle Docs, then there is, in terms of oracledocs.com, you can look at the tax implementation manual. So again, there's a nice summary of what the tax engine is supposed to do. And in terms of what I also like is this aspect, in terms of when we're talking about this is one when it talks about analysing your tax requirements. So again, it's similar, but just expands the slide that you've got in terms of on the PowerPoint presentation. So here they say to analyse your tax requirements, you're looking at who am I? So you look at where am I legally registered? Where do I operate? So in terms of, and you define perhaps the legal authorities, the legal entities, your legal reporting establishments. So you might well have each warehouse within a country, perhaps each of those warehouses has their own registration with a legal authority. What taxes am I subject to? So do I have transactional tax, withholding tax? Do I have some of the new environmental taxes? And again, that will influence what I need to set up in my core setup. What type of operations do I have? So again, the industries, is it mining, telecommunications, pharmaceuticals? And the tax authorities might have very specific rules on those. And again, it will drive whether we need to do more than the foundation. Do we need on this right-hand side to set up transactional, product or fiscal classifications to give us extra variation in the tax that we're going to apply? And ultimately, look, what do I do? So completely free, so go to docs.oracle.com, implementation a tax manual, and just have a look at there in in page 10 of that chapter. Takes you through all of those topics to get you thinking about how I need to configure in terms of tax engine. So let's have a look at so the minimum configuration is looking at this in terms of regime to rate. And what we're going to do is pause at that point, and we're going to pick this up again in the next topic.